Those that understand the fear profit the most. Most traders are taught to run from volatility. Sell the fear starts with a different question. How much fear is actually priced into the market before we make a decision? Fear shows up in prices. It shows up in options, premiums, expected moves, and widening ranges, leading to emotional decisions. The goal is not to predict tomorrow. The goal is to understand the environment clearly enough to make a better, risk-defined decision today. The VIX is the market's broad volatility gauge. It reflects the options market's expectation of near-term volatility in the S&P 500. When VIX is low, the market is pricing in a calmer environment. When VIX rises, uncertainty is increasing. When VIX is high, the market is pricing in larger expected moves. But VIX does not tell us what happens tomorrow. It tells us the level of fear being priced into the broad market right now. IVR, or implied volatility rank, gives us context for a specific underlying. Instead of asking whether implied volatility is simply high or low, IVR asks where today's implied volatility sits compared with its own recent range. A high IVR means current implied volatility is near the upper end of that underlying's recent range. A low IVR means it is closer to the lower end. This matters because every ticker has its own personality. IVR helps us compare an underlying to itself. VIX and IVR answer different questions. VIX tells us about the broad market volatility environment. IVR tells us whether a specific underlying's implied volatility is elevated or depressed relative to its own history. Neither one predicts the next candle. They are decision inputs. They help frame probability, premium, timing, and risk. The sell the fear process is simple. Fear, data, decision, risk. First, identify the fear in the market. Then measure it with data, including VIX, IVR, expected move, liquidity, and price structure. Next, decide whether the setup fits the playbook. Finally, define the risk before the trade is placed. The point is not to be fearless. The point is to be disciplined when fear is mispriced. The Sell the Fear book teaches the framework. The STF Trade Desk helps turn that framework into a repeatable decision process. Instead of guessing at volatility, you can evaluate the fear, check the data, compare the setup, and decide whether the risk is worth taking. To learn more and see the Trade Desk, visit stfdashboard.com. This video is for educational purposes only and is not financial advice. Options involve risk and are not suitable for every investor. Always define your risk and make decisions that fit your own plan. Buy the calm, sell the fear.